The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off, and no calmness coming into Memorial Day weekend. Going to be an interesting Friday. No one leaving the office just yet. We got markets with a little bit of tariff turmoil. Markets S&P off 1.5%, off 87%. How's a 50% tariff for the entire EU? How's a 25% tariff for Apple if they're not building all of their phones in the good old US of A, right? I guess the Apple truth, the Apple statement, the Apple tweet came first. You had Apple dip a little bit lower, and then the EU tweet followed suit. You have Apple down about $7 right now. Amazon taking it on the chin this morning. One of the biggest losers out there, down $7 on that number. You jump around to Microsoft shares. You see it dipping about $5 right now. Google giving back some of the gains we've had the last couple days, but S&P's off 1.5% right now. You have the NASDAQ 100 off 1.9% right now. The Dow off by 1.3% or 550 points. And you got the Russell off by 2.2%. Bitcoin trading lower with the market, down about $3,000 or 2.6%. Crude off 71 cents. Crude dipping lower on that as well. $60.48. We jump to yields. Now, you talk about a reversal of the action we had this week. Right, we're more than a full point higher on the 10-year right now at 110.13. You're talking about a 10-year yield of 4.47. And you jump to the 30-year. 2 full points off of yesterday's low. Remarkable. You're talking about a 30-year right now. Still about 5% though, 5.01. But the 10-year and the 30-year, both down about 10 basis points. Remarkable from where you were yesterday. Right now, again, the 10-year, 4.47. So just under 4.5. And the 30-year, just above 5%. And what is that doing to the dollar? Dollar weakness. We almost got a 98 handle on the dollar. Okay, the lows here, 97.92. Yeah, we got down to 99.13 this morning. And with some dollar weakness, gold, a little bit of a safe haven above the highs of last Wednesday evening. We're trading at 33.50, up by $60 in the price of gold. You jump over to silver right now, up by about 7 pennies. You see the difference, right? Silver's not the safe haven. Gold is the safe haven with what's going on right now. So if that's what you're looking for in metals, I mean, just look at the way we're moving right now in gold, right? This week, you're up on 3,200 to 33.50. We're now well above where we were trading. Yeah, Wednesday evening. And silver, different scenario. Not even close to where we are, right? We're still 70 cents from where we are on that Wednesday evening acceleration. You're not even back to basically where we were late in the day Tuesday. The uranium stocks catching a bid. CCJ, you see that acceleration of the pre-market. You have President Trump signing an order. All the uranium stocks trading higher. This thing is on quite a tear, man. CCJ, from that low you made, testing the lows of 2024 at $35. You're going to open today above 55. Looks like 60's in the cards. And we backed away from this area substantially back in December. And you do have some volume here as you fill this gap. So if you're in CCJ, you're going to need some real momentum to break above this area when you rip lower on that January 20th acceleration when you did 14 million shares in a day. We're right back into that gap right now. But uranium stocks catching a bid as well. All right, we jump to the headlines, and let's go to the headline that was first. 25% tariffs on Apple if the iPhones are not made in the U.S. Now, yeah, that sent shockwaves through Apple, sent shockwaves through the entire market. Apple, obviously. But boy, it should have been a heads up Next time you see one tweet coming, make sure you get your ducks in order because there might be two tweets coming, right? Apple first, the EU next. And yeah, if you think 25% on Apple's rough, how about 50% on the entire EU? And you talk about uncertainty. There are levels of uncertainty, folks, okay? And the level of uncertainty going into Memorial Day weekend that says in 10 days, we're going to impose a 50% tariff on every single good you bring in from Europe. That is a level of uncertainty that this market is not used to dealing with. Nonetheless, we get a rollover, and we've been talking about this area, man. 6,000's the cap right now. And boy, we're now below where we were on that acceleration higher on March 25th, but we've been talking about it. All that volume, okay? We got right to the top of the range, and then the buying stopped, okay? Remember how many people were selling as this market started from 6,000 to 5,600 before the real exacerbated fear ripped into this market. People were already selling. And when we've gotten back to the top of that range, what's happening again? Market participants are selling. And it's not going to help that we have more tariffs circulating the uncertainty coming into a long weekend. And yeah, over in Europe, they're obviously getting slammed this morning. Let's see. We got right now the DAX down about 2.2%. The FTSE down 1%. CAC roll down 2.6% as well. You jump over to Asia. Asia's closed right now, so they're not going to be reacting as much, but all right, we're going to talk some fixed income. Yeah, and it's going to be about tariffs today, man. We got a couple other articles we can pull up, but let's jump around to some of the equities this morning. Tesla shares trading down about $7. Palantir down $4 in the pre-market. Tesla and Palantir, two of the biggest retail trader phenomenons out there in terms of the number of retail traders. But we get the S&Ps coming down to test almost near the session lows. We made them at 8 in the morning, 57.56. We're trading right now at 57.69. Excuse me. Yeah, the only thing green on this chart right now, natural gas and the volatility index. And all things considered, folks, volatility, well, there's a real spike for you to 25. I'd seen 22 this morning after that first tweet, but yeah, 25. $28 to $30 has been the first level. We'll see if we see it. The dicey part about today, right, is that historically you'll have a light volume day today, right? We got a long weekend. I'll tell you, folks, in Florida, okay, kids had I think it was a half day yesterday or half day today. Either way, they're out of school. That's it. So historically, you'd see low volume. Not sure that's going to happen today. Okay, if you have any money in play, you can probably wait until 4 o'clock and make sure you're around if there's dramatic movements towards the end of the day. But when you have less volume, you have less market participants, and sometimes that actually increases the volatility. We'll be right back, folks. S&P's off by 87. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's off by 85, NASDAQ 100 off by 383 right now, and we jump around. Going to be focusing on Apple today. Down about $8 in the pre-market. Amazon, another one taking it on the chin, down about $6 from 203 to 197 right now. Walmart, yeah, no real huge reaction, right? Down only 70 cents. Interesting to see how some of these companies, whether you're talking about the EU in particular today, right? And how exposed they are to some of this volatility that is going to persist right now. Retailers Target down about $1.75 right now to $93.50. TJX down by about a couple bucks potentially to $128 right now. Jump over to Kohl's with a 7 handle. You know, we know where the critical area is on the 10-year now. It's at 119, 109.5, right? That's right where we came down to. That's right where we had the lows of April 11th. We've bounced from there. That's going to be the critical line in the sand. We'll see if we're bouncing all the way up to the 111.5 area right now. We're at 110.14 with the 10-year at about 4.5% right now. And yeah, in terms of nuclear, and that's the headline I was talking about. President Trump signing an executive order to support the industry. And yeah, it's happening, folks. You know, these AI companies, they need power. Microsoft inking deals with a nuclear power plant, right? It was a 3 Mile Island Microsoft inked a deal with. But yeah, you got all these companies. Oklo, NewScale, Constellation, Kamiko, as I mentioned, CCJ. And, you know, if you're trading these equities, right, let's take a look at CCJ. Because, yeah, that was the buy at 35. We cover this equity in the newsletter. We're not long. We missed that buy at 35. You ever get a chance like that again, go for it, okay? quite a technical area. That's where we bounced from in 23. It's where we bounced from twice in 24. That's where you came down to on the COVID lows at $35. Problem here is we're bumping up against this upper boundary line now. A lot of optimism, and we're going to open right at the highs of May 2024. But yeah, long story short, nuclear. That's the deal, man. The amount of energy that we need, clean energy, okay, and nuclear, clean energy. But yeah, that's the deal, you know. And nonetheless, we're going to open at an area of $55 to $60, you know. And let's see how we trade in here. You're going to trade above this area. You want to see some volume, because we're not going to get volume this week. I mean, look at the volume. We're going to have some volume today for sure, but you come in on CCJ with 12 million shares. That's quite a drop off from the 25 million you did last week and the 23 million you did the week prior to that, right? We traded from 45, and this is what my dad always talked about, right? Trading higher. We traded from 45 up to 55. We're going to open at 55 and change right now on CCJ. And the volume's not as strong as that you like to see over there. But this equity, man, longer term basis, uranium. Now, what's remarkable is I've been watching, like I talked about, Chernobyl on Max, HBO Max. I get to call it HBO Max now. I've been watching Chernobyl on HBO Max. Safety of the utmost concern. Where are they going to put those nuclear reactors? Who's going to live next to them, right? Yeah, that's a real factor as well. But it's coming, folks. Jump over to silver. I mean, look at this chart of silver compared to gold, right? Silver's basically trading into the October 18th bar. This is a daily. Folks, that's the October 18th bar in gold at 2,700. Okay? It continues to underperform. Can't catch a bid. And I'd be real skeptical of silver, even with the relationship going on. Now, you take a look at copper. Copper just chopping around, trying to find a path here between about 460 and 480. Trying to figure out which way we're going to break away from copper. Check out some copper stocks. You know, you take a look at these copper stocks, okay? They look weak. You get this dramatic volume down. And look at the fumes we're trading higher with for a company like Freeport-McMoRan, okay? Look at this volume on the lows, and then look at what we're doing on a weekly. This is, okay? Dramatically light volume. We were doing 87 million a week on that upside. Now we're doing what? 46 million, 65 million, and this week is going to be ever light as well. And Southern Copper is the other one, SCCO. Look at this thing. Okay, you got a nice rally off the bottom here of 11.7 million shares. We're coming into this dramatically higher volume from a year ago, March of 2024, when you began the run higher. But until you break out of this channel on Southern Copper, I wouldn't touch it, man. You know, you want to see a breakout, come back, test that channel line, accelerate on higher volume. That's when you got the probabilities in your corner. And if you're looking at these equities, okay, and then you look at copper, you say, yeah, maybe copper's going to struggle to find a bid, man. Maybe we're on the way back to $4. That's what the equities are showing. The equities are showing weakness, and we got copper at the top of its range, and it looks weak as well. Jump around some airlines this morning. Delta trading down by almost $2 to $47 right now. United trading down by a couple dollars as well, $73. American, yeah, slightly in the red as well. We jump over to JetBlue shares. Where are we up to right now? Right to the 382. Be careful on JetBlue, folks. You're trading this thing, I understand it. But it's very tough to find strength in this equity on a technical basis. Okay, yeah, we had that huge acceleration on April 28th. But all we've done is bounce to the 382. You put it on a weekly basis, somewhat catching a falling knife even on that bounce. Let's check check out some of the banks this morning. There we go. JP Morgan down about $5 to $2.55 from $2.60. Bank of America slightly in the red. It's going to be interesting to see what happens on the volume today. Historically, like I mentioned, right? Friday of a Memorial Day weekend. But boy, when you kick off the session, down by 1.4%. The Russell kicking off the session down by more than 2% right now. We got the dollar well under 100 right now. All right, folks, stay tuned. We got the S&Ps down by 79 points, and we're coming back for the opening bell. NASDAQ 100 down by 349. Dow off by 500 plus this morning. We'll see. The day's young. Maybe we got more tweets out there. You never know. We've only had 2. Next time you see that first tweet, remember there may be more coming. That's what I'm going to remember, man. That first tweet, imagine. That was a sell, man. The tweets, they come in packs. Stay tuned, folks. We're coming back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open with the S&Ps down by about 70 points. A little bit of a bid there coming into the opening bell from the market lows. And yeah, down by 1.2%. NASDAQ 100 off by 1.5% right now. We check out Apple shares. Just off the low of around 193. We're at 195.77 right now. We get a little bit of an acceleration. We're only 42 seconds into the trading day, so we got some time to find out where supply equals demand. Microsoft down by 1.2% right now. Google shares off by a percentage point. It's always interesting to see, if you want to get out, and this is where days like this, okay? Let's say you want to be a trader, and we all have perspectives, right? Maybe you think this volatility is great. You want to be in the equities, and you want to be buying the equities that are trading lower on today because you think that they, on the long-term basis, are a bargain right now. That's great, okay? Pay attention to those. Let's say you want to buy equities that take this type of volatility out of the equation, okay? Look at the equities performing the best today. Now, this is the EU. It's not everything. We might get Asia tomorrow. Don't think we will. But it is, you want to take yourself out of. If this is one of your fears, days like today, look at some of the equities that are performing well, okay? Netflix, say only down 0.5%. No real huge reaction. Not Disney, off by 1.8% so far this morning. I mean, the tech stocks, all of them, right? Oracle off by 1.5%. Salesforce off by 1.6% right now. AMD shares 2.6%. NVIDIA 2.7% right now to the downside. Intel 2.6% right now. Yeah, company like Walmart, right? We've seen it before. You're looking to get out of the riffraff? Walmart gets you out of the riffraff, man. Only down about 0.3% right now for Walmart shares. Not the case with Amazon. Ooh, look at that bounce. Even on the bounce, still down about 2% for Amazon shares. And let's talk a little bit of yields. You can't help but think about it, okay? 30-year Treasury note, great entry point is what they're talking about. Yields are near 5%. As a trader, I would have to agree, okay? 30-year was as high as 5.1%. And look at the action we already got, right, if you were buying that number. In terms of jumping over to the 30-year right now, you're up almost 2 full points. I mean, imagine, you're up almost 2%, okay? Even if you're, pick a number here, you're up by 1.5% on a fixed income trade on one day in terms of that bounce from 110 to 112 almost from yesterday to today. We take a look at a weekly, 5-year weekly on a technical basis. Yeah, you got to love this entry, okay? We just looked, you look at CCJ, that buy at $35, right? A nice reversal. We're right where we were at the beginning of the year. We're just below where we were a year ago. Okay, but you do have this 107 low hanging out there when yields were really spiking on October of 2023. With that in mind, you go back further and you see how often, if you were buying at 111.5 prior to this 0% interest rate environments everywhere, that, yeah, you were actually at a much lower price. Now, the argument against that, okay, is that this part of history, when we had the 30-year rising to that level, we weren't dealing with the level of debt that we are right now. Okay? And the level of debt service that we will have to take care of as interest rates rise, potentially at these levels, is not akin to where it was. And you might have the market react prior to that level. And that's the difficult part. So on a short-term basis, yeah, 5%, 5.15. The only thing I heed you is get a stop in place no matter what, okay? If you're trading these, like the article says, buy the dip in treasuries, okay? Yeah, I was making sure I got the headline correct. Buy the dip, buy the sell-off in long-dated treasuries as the government's likely to bring its debt under control. That's the takeaway. I bring this up because do you think the government's likely to bring its debt under control? What is everybody talking about? That's the other part of it, okay? It's a great entry point. And yes, bond investors are incentivized to punish the unambiguously unsustainable path of debt and deficit, okay? And I pause there because, we're on this trajectory, man. I was listening with the press secretary yesterday, okay? And she was saying that this bill does not add to the deficit. And it's like living in banana land, that of course it adds to the deficit. You can call it a tax cut, but of course it does. We all have priorities, okay? Everybody has priorities. That's why this whole deal of hard right, hard left, I think everybody kind of, at least, if you're in the middle somewhere, you agree on a lot of things. It's just where you prioritize things. Okay, I think we all agree on a lot, but what are your priorities? And that's where you fall to the party. You fall where? So right now the priority is tax cut in the effort of growth, which is great. But to hear the press secretary talk about that when you're talking about probably $5 trillion in deficit added over 10 years. Okay, that's what the market knows, and that's how the market's reacting. And I struggle to see how it gets under control. There's a lot of hope, and hope's not a plan, that they get it under control right now, and that's not even close, man. It's not even close. You're going tax cuts completely, and maybe that revenue, but not to offset $5 trillion over 10 years. And it doesn't even have to be political, folks, but somehow it becomes political because neither party, it goes left and right. Every 4 to 8 years, no matter what, every 4 years, everybody flips, the priorities are in place, and nobody is caring about the deficit right now. And maybe the bond market's finally going to push it because we're approaching a level where, those tax cuts, you go out 10 years, you're looking at the debt would be about 100% of the GDP. With the tax cuts, it's like 130%, okay? And you can always say that, well, we're going to grow the economy. I say it every time. That's like an investor coming in that has a plan, that has a pro forma spreadsheet, that they are going to become, the next Slack.com, right? That they're just going to grow exponentially like the market hasn't seen and defy all expectations. That's what got us in this mess in the first place, is the expectation of unrealistic futures. And so, I'm looking at this in terms of technically, you can't refute the buy here, okay? You can't. Look at this chart on a technical basis. That's the buy, folks. But keep your spikes up on your back because you better believe that we got a problem. And the solution is nowhere right now. And the market's going to correct that at some point because there'll be a moment when investors say, man, I'm out of here. I'm not buying long duration bonds. And that's a severe problem for obvious reasons. And of course, hindsight 2020, the time to be doing it was 0%, right? Not at 5%. And that's where we are right now, 5%. And paying 5% on $30+ trillion is something that could dismantle this economy unless they get it under control. And dismantle, all right, we'll be okay. But there's going to be some hardships here. And the bond market might be bringing it right now in terms of making sure you're paying attention. So on a longer term basis, my spikes are up to say, you know what, man? I hope we're not. Because, real estate, right? Mortgages, what's going to happen there? The ebb and the flow. But, man, you push it out to a 30-year. I said, man, maybe the cost is going up, man. Maybe it goes up for a year, 2 years. We finally get the house in order with some plans to decrease that deficit. We'll see. Nonetheless, S&P's off by 56. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps off by 61 points right now. We charge higher on the open, get back to about 5,800. We're chopping around at that price level right now, off by 1.1%. Yeah, you talk a little bit of Fed, you talk rates. Now, they were already tentative, okay? We had many Fed governors out there saying, we're going to wait. The chairman himself, right? Maybe one cut. That was Raphael Bostic. And you have Chicago Fed President Austin Goolsbee. So he's out there saying, man, this just complicates things. You have to understand the nature of it, okay? And that's as in you don't have to understand it, but it just makes sense. How are you going to adjust policy from the Federal Reserve to influence the economy when in any given moment, right, you have an economy-changing policy shift that happens on Friday before Memorial Day and it kicks in 10 days? They're in the business of forecasting. They're in the business of forecasting. And imagine forecasting, right? Many companies pulling their forecast right now. Everything's always on the table, but I feel like the bar for me just got a little bit higher for action in any direction while we're waiting to get some clarity. That was on CNBC this morning. So I think we'll have to see how big the impacts on prices are. I know people hate inflation, okay? Everybody wants them to cut. I say everybody. But how are you going to cut if you're worried that there might be inflationary forces like tariffs that jack up the price of EU imports by 50%? It's a reasonable argument. Whether you agree with it or not, you better believe the Fed is considering that argument. I mean, look at this move. All right, we're down a full point from where we were at 8 in the morning in the 30-year. My goodness. Look at the move in the 10-year. Can you imagine if we get it all back? Remarkable. All right, let's check out some of these equities. Apple shares down 2.5%. Amazon, there's a clawback, down by 1.3% right now. Microsoft, 0.9% in the red. Google down by a percentage point. Nvidia down by 2 full percentage points right now. Yeah, AMD off 2.1%. It's quite a charge higher by the Russell. Percentage-wise, you're talking about a move of 1.5% from the lows that we were at 2,000 made this morning. Bitcoin continuing to hold up pretty well. Jumping around trying to pull up this one. So, you have the G7 going on right now. This is part of what. There's a lot in flux, but going into the long weekend, man, you taking the risk, and maybe you are. I think we're going to have some action this afternoon as you come into a 3-day weekend with this looming. And, you know, they're getting the stick today in terms of the carrot and the stick. Man. Gold up by about 1.6%. Let's jump around to some of the gold equities. Harmony shares. Let's put it on a daily. Up by 3% right now. 1563. We got highs out there of 1877. Vista's been on quite a run, man. You know, if you have some Vista equities, okay, folks, there's nothing wrong with taking a little off the table. You know, I'm never going to tell you to sell your whole position because, man, this thing is strong, right? You're coming into an area, though, technically. Yeah. This double top, okay? Everybody that was in this equity when it traded lower in July of 2021 with 26 million shares on a monthly basis, you're right at the tippy top of that area. Do you know how many people have been in this equity since 2021? I said, man, I would love to get out at $1.20 again. Can't believe I didn't take it when you traded from 90 cents to $1.40 in that run in 2021. We were there in 2020 as well. And you back it up further than that. The one time you made it above that price level in what, the last almost 10 years? You were up there for 2 months and you gave it all back, and we're back there again. So this technically is a tough area for Vista. Okay, you're also at the 1 to 1.618 expansion. There's nothing wrong with taking half the position off, okay, and get some free shares. I mean, no matter where you got into this equity recently, you're talking about, what, a double bagger from where we were February, right? Let alone when we were back down to 50 cents. Or February, when you were trading at 35 pennies, 30 cents, 30 cents, right? You were there again in February when you started this run, and you're now at the 1 to 1.618 expansion. So you're up another 4% today. You're up 5 pennies. You're pushing $1.30. A great run. You're doing it with strength, too. That's what you like to see, right? Look at this weekly volume on Vista. We got a chance to break above the April 21st volume. We're going to do some big volume today. We're at 6.1 million shares right now, and we got to do about 1 million shares to get to the 7.1. What did we do yesterday? 828,000, right? We've already done 250,000 right now. We got some action in the market. We got a real chance on a weekly basis, and that's because of this move here on a weekly basis, right? That's what's powering this week. That move higher, but that's what you need. That's what you want with strength. So, yeah, you can see only that's hanging out there. So you're potentially going to break away with dramatic wide price spread. You're going to do it with volume. And, yeah, we got dollar weakness right now at 99.391. And you got the gold contract. I mean, we're pushing at a weekly record for a close, right? Yeah, we are. $33.45 right now, gold up by 1.5%. As I mentioned, though, silver stocks not created equal. Silver doing well, but just back to where we were in May. $33.23 right now for silver, and well off the highs that we had made in October and then again in March. We check in on UNH, quite a week for them. Quite a month. Whew. From 600 to 248. We're flat today. Yeah, it looks like 300 is the price we're going to chop around a bit for UNH shares as of right now. Checking out Visa, off by 1.5% right now. As we come into this final break. Look at this Visa equity, right? Whew. But be careful on Visa here, man. You know, these double tops, okay? That's where you want to have your spikes up. This thing's been on quite a run. We come up, we test the areas of March, just like the market, basically, right? That's where the selling began in the market. You can see it in Visa as well. Remember, right there. February 27 to about the middle of March, all that volume, we're right into that area on many equities. Stay tuned, folks. One more segment. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off by about 67. That's 1.1%. NASDAQ off 1.5% right now. And yeah, trading a little bit lower after the acceleration on the opening bell. And we got a long day to go. We'll see what happens in terms of this market. Friday, coming into Memorial Day weekend. And on the heels of that, everything that we're talking about, right? There's only so much air in the room. But this one, U.S. debt limit nail-biter looms as Senate ponders the Trump tax bill. Now, you had Secretary of the Treasury, Scott Bessent, out there saying that he doesn't think that the Senate's going to have any major revisions. Hope is not a plan. He is a member of the administration. The Senate is going to have some changes. And if the House had problems on the first go-around where they got to do it, it's going to be interesting to see what happens. It's going to be a protracted process in the Senate. Republican members have indicated that they expect to make extensive changes on the way to the passage. Could be further problems, okay? So we're going to get to do this again. And then when you look, okay, securities maturing in August, man, it's coming, man, this summer, right? That's when the U.S. will likely exhaust its borrowing authority. Bills maturing in August are cheapening relative to the rest of the curve, with August 21st at 4.34%. So they're factoring in a risk around that time period that they might have problems if you're looking to get paid out for a period of time. You might see a delay, and that comes with the bill. And yeah, that's coming right now in August. And don't forget, so now what do we got? We have 50% Euro tariffs coming June 1st. Apple, that one's just hanging out there indefinitely. Make the phones in the U.S. are 25%. What's the deadline? We don't know, but that's the threat, right? And then don't forget the 90-day pause happened in April. Well, that's July. So now what do we got? We have 50% on Euro coming June. We got the 90-day pause coming July. Apple's got 25% hanging over their heads right now, coming into the long weekend. We got some uncertainty in this market, man. VIX spiking. Folks, thanks so much. I'm coming back with the top of the hour update. And we got a couple replays today coming into Friday of a long weekend. But stay tuned, folks. We'll be back. Have a great weekend, everybody.